Hello, everyone. Welcome to today's live session on managing the change to AI-driven mortgage underwriting. My name is Rhonda Meyer. I'm the Director of Brand Marketing here at Ocrolus, and I'm super excited to have you with us as we dive into how AI is reshaping the mortgage underwriting landscape and what that means for the future of lending. Today, we'll be hearing from two Ocrolus experts, Rebecca Seward, our Director of Mortgage Product, and David Gipson, Senior Sales Engineer here at Ocrolus, both of whom have extensive experience in the mortgage lending industry. So they'll guide us through some of the critical changes happening right now and how AI can help lenders like you stay competitive. Session's going to last about 30 minutes, so we've got 20 minutes of presentation followed by about 10 minutes of Q&A. Feel free to submit your questions at any time using the Q&A feature or chat, and we'll get to as many as we can at the end. So without further ado, let's get started. Becca, David, the stage is yours.
Thank you. Welcome, everyone. All right, so just quick introductions. My name is Rebecca Seward. I am Director of Mortgage Product here at Ocrolus. I have coming up on 12 years of experience in the mortgage industry, working on both the lender and vendor side of the business. I leverage my experience throughout multiple departments, including closing, compliance, software support, to assist lenders in optimizing their workflows using AI-driven technology. And with me today, I have
David Gipson, Senior Sales Engineer here at Ocrolus. I've been with Ocrolus about 3 years at this point, but prior to that, I spent about 11 years in mortgage, half of that as an originator, half of that as an underwriter. So I work daily with our clients to understand how they can leverage technology to be more efficient in their day-to-day, which I think obviously will play into much of what we're going to discuss today.
Yep. So before we get started, we wanted to do a quick poll on our attendees. Which department do you represent today? This will just help us understand who is with us on the call today so we can hopefully tailor the conversation just a little bit to the attendees. All right. Great. So we've got a pretty wide distribution of participants today, which is great. So let's go ahead and dive in. Now, as David and I just mentioned, we both have over 10 years of experience in this industry. So we are certainly aware of the cyclical nature of the mortgage market. And it's no secret that the last 2 years have been challenging for all of us. It's been a very volatile time. But the good news is that when we look at the macro shifts, there are signs of a potential rebound on the horizon. Right, David?
And this is probably not news to anybody on this call, but we work in an industry full of hills and valleys, and obviously we are in one of those valleys right now. But all indications are that over the next 12 or 18 months, there will be some sort of rebound in the market, and it's something that, with the rate cut recently, we've started to see ourselves, right? We are processing documents daily for our borrowers, and over the last quarter, we really have started to see an influx of volume from the clients that we're working with to help automate their solutions today. And I, just like many of you probably are subscribed to many different mortgage industry newsletters and things like that. We see headlines like this all the time. Anytime there's a drop in interest rate, demand is surging, refinances are coming, borrowers waiting in the wings looking to purchase once we kind of hit a certain mark. And we kind of know this. And what clients talk to us on a daily basis is, how do we get ready for when that happens and we're not caught flat-footed like we were, during the pandemic or many times before, when we suddenly have, an influx of applications coming into us and knocking at our front door. All the while, as volume has been decreasing steadily over the last few years, mortgage loan origination costs have risen, right, by 35% according to Freddie Mac this year. And it's something that we talk about frequently, that volume is down and it's also more expensive than ever to originate a loan. So as we talk to clients, they're not just looking at how do I handle an influx of volume, but how do I do things more efficiently so that I'm really prepared for not just current state, but future state as the market continues to evolve.
Right. So just kind of in summary, lenders really need to prepare now for increased demand to stay ahead for two reasons, right? We mentioned the rising cost to originate, And the rising costs have been caused by compliance burdens, the need to underwrite more complex loan programs to meet more borrowers in a low market. But if we look back to 2020 and 2021, when volumes were at an all-time high, we saw a lot of lenders having to hire a bunch of staff in order to meet that increased demand, which is just not a sustainable way for your business to grow. And of course, when things slowed back down in 2022, that's when we had to have all of those really difficult conversations and decisions around layoffs. And that just leads to a lot of loss of expertise, a lot of loss of scalability and stability within your workflows and your organization, which is why it's so important right now as we look forward to this potential rebound. We need to start thinking about ways that we can optimize workflows so that we can scale the business more efficiently and still be able to operate lean. Now, over the last 5 years, we have obviously seen an increased demand on how we can infuse AI into our workflows. So, talking more about transitioning into AI-driven underwriting, we look at where has the demand been for lenders to implement AI into their workflows. Now, historically, the AI process has been all about how do we improve the borrower experience. Traditionally, lenders have been thinking about using AI within the point of sale, but as volumes are decreasing and as origination costs are rising, the shift has changed into operational efficiency. How do we improve operational efficiency? So that makes sense, right? How do we make things better when the cost to originate is the highest it's been?
Yeah, and with that, the focus obviously has changed from ways that we can provide a better experience utilizing AI to how can we be more efficient in our day-to-day. But that does not mean that adopting these types of tools is necessarily, ignoring the client experience. Again, thinking back to 2020, it's just the most recent time where we've seen that influx in volume. I think to when we were in the middle of the pandemic and turn times on some of the originations for even an underwriting decision and getting a loan closed, we're getting to 60, 75, sometimes more days. And that's really where creating a more efficient process, yes, that is better for your business as far as the dollars and cents. But when it comes to the human aspect of just getting your borrowers to the end of the finish line, which is ultimately how they get a great experience, how they refer others to use you, having that really efficient workflow is going to provide a better experience, not just for your employees, but for your customers as well. So again, this is what we have discussions with all the time. How do we utilize AI to meet these needs, anticipate this change, and be able to just handle a mortgage application more efficiently?
So I think what we're really trying to say here is the next market rebound will present opportunities, but only for lenders who are ready for it. So technology like AI helps you be more proactive, not reactive, so that you can scale more effortlessly and serve more customers and scale your business in a more effective way. So when we think about how we're going to optimize operations and reduce errors, leveraging AI technology, we think about the more remedial tasks, the manual tasks that your human decision makers are doing on a day-to-day basis that could easily be solved with technology. So think about document handling, income calculations, things that an AI tool can help with immediately to help improve your underwriting efficiencies, and using that document-driven data to provide deeper borrower insights so that you're making more compliant, more accurate, faster decisions, all the while reducing operational costs.
And change happens when the pain of staying the same is greater than the pain of change, right? And this is a paramount shift in how we're going to utilize technology. Meanwhile, though, we speak to lenders and there really are barriers to adopting AI technology. We know that the market realizes that there's a solution on the horizon, that there's ways to do things more efficiently, but at the end of the day, it is a full company buy-in, really, to go ahead and utilize tools like this. I think back to 8 years ago when I was underwriting, and we were really kind of seeing the first signs of AI really coming into this space. And I thought, you know, 5 years from now, my job is going to be replaced by a robot, right? But ultimately, that is not really the tools that we've seen find success in this space. The human element is still extremely important. But what we can use AI to do is to take the menial parts of, your team's day to day, out of the picture and let them focus on, the higher level parts of their day, making risk decisions, doing things that really impact getting the ball down the field, and let AI handle those menial tasks like, data transcription and moving documents around within your workflow. So is your team skeptical about adopting AI? I hear it every single day when I'm speaking to our clients and prospects. But really, what we found is we need to show our end users what's in it for them and how we can actually make their day better by doing, the parts of their job that they don't really like to do, so they can focus on really high impact parts of the origination workflow.
Right. And I think it's important, we saw at the beginning the poll that we have a bunch of different type of people on the call today. We have loan officers, underwriters, buyers, decision makers, but it's everyone's responsibility for us to show our team members and the people beneath us what's in it for them. Now, let's look at a real world example of how AI made a tangible difference for one of our lenders. We did a case study with Home Trust Bank, who is a lender that we work with out of North Carolina. And after implementing AI-driven document automation within their workflows, they were able to save hundreds of keystrokes per loan. So again, automating those remedial tasks enabled them to spend less time on these keystrokes and entering in data and transcribing data on loans, which led to 8,500 hours of savings across loan processing teams. And that has tangible benefits when it comes to operational costs. We saw a $90,000 reduction through efficiencies just through AI-powered document automation, which can be just one solution in your AI-driven tool belt.
And I got a chance to actually be on site with Home Trust earlier this year, and a real world example of a loan file that they brought to us is like, an underwriter had a file with 40 different rental properties. In previous state, that would be a landmine that you sometimes step on when you're originating a loan, where it's like, I'll see you tomorrow. I'm going to be transcribing data for the foreseeable future, right? But utilizing AI, they were able to have all of that data sorted, ready to go. In their words, this is exactly how we would have done it. And they were able to focus immediately on doing what they do best, right? Making a risk decision on the file, interpreting the data, and getting to the right answer with a faster, better, smarter decision. And again, these are the types of ways that we can smooth out your underwriting, your processing team's workflows, utilizing tools like this, because the day-to-day is much more consistent when some of these remedial tasks are just managed automatically in the background. So your team is just ready to go when it comes to time to make a decision.
And we help our lenders manage change all the time. So after speaking with a bunch of lenders who we've seen and worked with implementing this type of technology, and of course spending a lot of time at conferences speaking to customers about best practices on how to handle the change management of implementing this type of technology, we have come to a point of identifying a few best practices. So the first is for your team to set business goals and define KPIs that you would like to see after leveraging and implementing this type of technology. So what ultimately are the goals that you're hoping to get at by adopting AI? The second is to establish your baseline. So what am I doing right now without this type of technology? Whether that's cycle time, origination costs, loan volume, whatever it is that you really want to focus on optimizing, establish your baseline without AI. Then analyze your current tech stack and workflow. So what is missing right now within your day-to-day operations, within your workflow, within your process that is not allowing you to meet those KPIs today? And that will enable you to figure out what technology is right for you and your business. And then when you're actually rolling this out, especially if you have a business that is decentralized, where there are processing and underwriting teams across different branches across, the broader US, roll it out to a pilot group. Find those branches that are going to be more willing to adopt, and then leverage those pilot groups to influence change across the broader organization. So find your influencers essentially who are going to help you drive broader adoption across the organization. And of course, we, shameless plug, want to share that we do also offer a course to help encourage teams to understand the power of AI. So we have a course that essentially explains that AI-driven technology is not here to replace underwriters. It's not here to replace any loan team member. It is here to assist them and help them make faster, more accurate decisions.
And I think this is so important. The ongoing training and support of understanding how to utilize these tools is really, the most important step for seeing success and ROI in any sort of investment like this. When you make a decision to use technology like this, great. But what are you doing as far as ongoing support for your team? It's something we really prioritize is helping our clients through the change management of adopting tools like this. And I think regardless of whatever tools you're looking to adopt, it is not a one-time decision. It is a company-wide, decision to really embrace this type of technology to get the most out of it, and making sure that, not just the decision-making team is bought in on, using AI tools, but really getting on that ground floor with your processors, with your underwriters, with your loan officers on enabling them how to use technology like this, how to understand the decisions that were made to go this route is really paramount for success as we kind of look into this transition into AI-driven mortgage underwriting and mortgage processing.
So again, building a scalable mortgage underwriting process leveraging AI. So think about built-in stability, right? In a fluctuating market, hiring and firing to meet demand it's no longer sustainable. It's no longer going to cut it in mortgage lending. So AI offers a future-proof solution that allows you to build in scalability into your workflows. It allows you to handle surges in volumes more efficiently without needing to constantly adjust your staffing levels. And by integrating AI, you gain the flexibility, the accuracy, the compliance to thrive in any type of environment.
And then when we think about choosing the right AI tools, Ocrolus is one of many out there, and I think it's very important to understand your needs and, what is the right partner for you. And when we think about this, there's a couple main points to really consider, right? Partnership and integration. Are we working in the tools that, or in the systems that you are working in? Do you have a partner that is, again, not just throwing you over the wall, but really there to help you find the most success out of the decisions that you made? Accuracy and compliance, right? How accurate are they, and how can they measure that? What are the tools that they are looking at to really ensure that when they pass along a decision or help to automate a part of the process, that we can trust the actual decisions that are being made automatically? And then flexibility, there's nuance across different teams, across different organizations, and how well does these tools fit into what we need to do and solve our specific problems and our way of doing things? And then we talked about skills and training. I will say it again. It is so important to really think about this as not a one-time decision, but as an ongoing process that we are nurturing over time to make sure we are getting the most out of the types of investments that we're making into AI. And all of this bleeds back into the KPIs that we've really onset of what are we going to get out of this type of decision and how do we on it to impact our larger business.
And I would say for everybody on this call and encourage people to leverage your network. Talk to those that you have worked with in the past or other organizations that you partner with, what type of tools that they're implementing and how they found success. It's funny that an industry that's worth trillions of dollars feels so small, right? So ask others what they found success in and what sort of technologies they're using. And this is important also for lenders to understand that if you want to attract top talent into your organizations, this type of technology is going to become table stakes. You're going to find more and more processors, loan officers, underwriters who are used to leveraging this type of technology. They realize the benefits that it has for them. And so when they're seeking a new job or new employment, they are going to expect this to be available to them. Same thing with the younger generation as we begin to see more and more of the millennial and Gen Z generation entering into the job market. They will expect this type of technology as the market continues to grow and scale.
So some key takeaways today, lenders need to adopt now to stay competitive in a shifting market, right? There's tools right now that can help to enhance the things that you are doing today, but the markets go up, the markets go down. We know that this happens and we have to be ready now. So how are we prepping ourselves to be able to kind of handle that type of influx? And all the while, AI is boosting efficiency and reducing the manual work to help accelerate decisions. This is obviously feeding in to what we talked about before of being more efficient in how we actually are processing a loan. Lending teams can be skeptical of AI until they try it. I think really understanding, we talked about it before, like what is in it for them, showing not just those in the room making a decision, but those who are actually going to be utilizing the tool, why we made it, bring them along on the journey with you, how we're going to make their day-to-day better and more efficient. And again, by choosing the right technology, lenders can help ensure scalability to drive future growth. So I mentioned at the top, there is an influx very likely coming over the next 12, 18 months. So how are we going to choose the right partners to help us be ready to not solve problems with people, but be able to just be more efficient with the group that we already have?
Right. And of course, we would be remiss if we did not mention the company that we work for, Ocrolus, and how we are enabling lenders to make that digital shift into AI-empowered underwriting. We are more than happy to discuss this with you. We are actually attending the MBA annual conference next week. So if you're in Denver, we have an exciting announcement. We have a new product that we will be demoing at the Hub stage on Tuesday. And of course, if you're not attending or if you're, virtual, I encourage you to keep your eyes peeled for an exciting announcement that's coming next week. We'd be happy to talk to you personally about how we are empowering lenders to make that transition and scale their business effectively through the use of AI-driven technologies.
Awesome. Thank you so much, Becca, David, for sharing your thoughts, your insights with all of us. Greatly appreciate as we've seen and as you guys just kind of shared with us, incredible opportunity for lenders to make the shifts to AI-driven underwriting, not just to prepare for the rebound in the housing market in a more timely manner, but also in general to streamline operations and reduce errors. So thank you both for sharing all of that with us today. We do have time still for some of your questions now, so we can dive into the Q&A, see what we've got here. I have a few private messages as well I can get to, but let me open up our Q&A. Okay, I'll let you guys decide kind of who wants to take this or if you want to co-pilot it. In our company, each branch rolls out technology differently. How do you suggest implementing when not everyone is receiving the same training?
Yeah, absolutely.
I
We
think
see this often.
Go ahead.
Sorry. Yeah, with decentralized retail branches especially, right? Where not everybody is moving at the exact same pace, but there tends to be a branch that is going to be more open to utilizing technology. So we often kind of say, this is back to what Becca was talking about earlier with a pilot group, is really finding that thought leader internally within the company that is looking to be more efficient, right? And as they see wins utilizing this technology, it tends to roll downstream, right, with the rest of the group. And that's really been the most successful way that we have kind of seen this type of technology implemented and seen the most success is finding one group that is ready to go ahead and kind of be the pilot, show the success internally with what they were able to accomplish, and then be able to kind of influence the rest of the groups across the organization to find the same level of success.
Well said.
Awesome. Okay. I have one that came in through an email through RSVP. I can throw it in the chat just so everyone else here can see. To everyone. Okay. Is there a way to better understand how much this type of technology can save an organization based on size or volume? So a little bit more on the cost savings end.
Yeah, absolutely. I think, again, that goes back in our managing change slide about how you need to establish your baseline. So, depending on the size of your business, how much volume you do, what your origination costs are, you need to understand how you're operating right now and the KPIs that you would like to meet leveraging this type of AI. And that will really allow you to understand sort of, the goals that you have in mind, depending on size, scalability, et cetera. Of course, businesses like ours often have ROI calculators available to lenders as well, where you can kind of plug in your specific business's metrics and your business's personal properties and just try to figure out what are the cost savings to your business specifically. So I encourage you, if you are trying to look for these types of technologies, to ask your sales representative or whomever you're working with if they have an ROI calculator where you can kind of workshop the opportunity for ROI.
Thanks, Becca. David, I might direct this one to you, a little more technical in nature. So Question is, while I understand the potential value of AI in our organization, it's often discussed as a black box solution without concrete examples. Could you provide specific examples of how AI can be technically implemented into our workflows and what it actually does in practice?
No, and I think that's such a great question because when you think about AI, there's kind of two levels to this, right? The function of performing a task, and then there's making that usable for the end user. As an example, we've been in business for 10 years, and before we built any of our mortgage products, we truly needed to solve the problem of how do you get documents off the wide variety of different types of variation of documents you see within a mortgage application. We don't always see clean PDFs of one of the big five banks, right? We see small credit unions, we see cell phone images. So solving a problem utilizing AI, pulling data off of a document, that is a bit of a black box. It's great that we have all that data, but what do you do with it, right? And you have to be able to take that data and build great product on top of it to really utilize within your workflow. Some things that we do specifically with our mortgage clients is helping with the automation of document sorting. There is a lot of digital paper pushing that happens within a mortgage application, and seeing the variability of the different documents that come in a mortgage application and getting those items processed, recognized, renamed into the correct spot within a document management system. It seems fairly simple, but it is time consuming to break up a PDF, to reorient a doc, to look for duplicates. These are things that we can just do automatically in the background. So when your team comes into a loan file, it is organized, it's ready to go, it's clearly marked, and it's just time saved off of the time that they are spending in a loan. Additionally, anywhere you think about looking at a piece of documentation and you take your fingers and you put them on a keyboard and you're clicking in data points, right? That is inherently inefficient by nature. So using AI to take data off of those things to help pre-fill out income worksheets, identify discrepancies between the 1003 data and all the borrower data that was sent in. These are the types of solutions that Ocrolus is really focused on. And I know others in the AI space are looking at other ways that they can make more practical impact on the client's workflow. But for us specifically, we're looking at anywhere we can pull data off of client provided documents where you're used to using like a cursory eye look and transcribing data, and we can do those things and bring to light so that, again, you're making a faster, better, smarter decision because maybe I'm not searching through 2 months of bank statements for a large deposit that is fed to me, or I'm not transcribing multiple schedules from an S Corp into a spreadsheet. It is done for me so I can start in the red zone and all I have to do is get the ball over the end zone.
I think one more thing I would add to that is if your team is sort of skeptical and worried about the black box effect, find technology solutions, that are automating what you want them to automate. If you don't want them to automate the decision because you don't know how to trust the decision because it lives in a black box, find technology that's going to help you quicken the decision or make a more accurate decision. What Ocrolus does is not automate, but we assist. And so we have UIs and tools that allow lenders to also trust but verify our system. We have UI components where lenders can see exactly from where we extracted the data points. So I encourage you to try to figure out how the product works also and where they get that data from and how they're leveraging it to make decisions.
Okay. Yeah, at time. I don't want to head over. There is another question in here, but I will share that, Becca, David, with you guys offline, and we can get Sebastian's info over and get him an answer if that's okay with you all. Just want to thank everyone again for joining us today. If you do have any additional questions, feel free to either visit us, ocrolus.com, or you can also connect with Becca and David on LinkedIn. We're happy to help you. This recording, all the content in there will also be shared with you all via email tomorrow, so you can look in your inboxes for that. Hope you found today's session helpful and you're as excited as we are about the future of AI in mortgage underwriting. Appreciate you all spending your brunch and lunch times with us, and have a great rest of your day.